Hey, good morning, everybody, or good day, depending on where you're at. My name's Rob, and happy to have everybody here with our Tuesday live webinar this morning. Well, we're in California, so it is morning for us still. Anyway, want to make sure that you can hear me. So can somebody give me a yes in the question box just to let me know that you can hear me? Very good, Randy. You're always quick on the draw with that. Appreciate it. Let's see if I can get one more just to make sure everybody can hear us. All right, very good. Thanks, Frank. Okay, well, anyway, we want to kick things off here. And what we're going to be doing is the agenda. We're going to go over the volatility report a little bit, but we're going to do it a little bit differently than we normally do. We look forward to chatting with Wade over that a little bit. And then what we're going to be doing is reviewing your questions. So what we want to make sure that you do is two things. If you would like us to look at a currency pair, make sure that you give us your entry time frame and then your directional time frame, so in the currency obviously, so that we can take a look at that. And we'll try to get to as many of those as we can during the webinar. And if you don't or can't get your questions answered, you can always send those questions into support at Trade ATS, and preferably with a screenshot so that the support team can write something back to you that makes some sense. The other thing I want to remind you, because I see somebody had put something up here from a technical nature, if you have a technical questions about the indicator or license key or anything like that, we're probably not going to be able to answer those during the webinar. We'd like to handle those tech things again through support at tradeats.com. So appreciate everybody being on here. And what we'd like to do now is we'll go ahead and we'll turn it over to Wade, and we'll talk a little bit about the pairs that are on the volatility report. Wade, take it away.
All right, thanks, Dad. Appreciate you guys being on this morning. I'm just going to preface the morning. We'll let you guys know I got to bed late last night. I went to bed early, but wasn't able to sleep very well, so I'm a little bit low energy this morning. So I apologize if I'm not anyway, rambling as fast as I normally do. But anyway, we're going to try to look at a few pairs and shed some insight on what's going on here. I did go through some pairs yesterday, just kind of seeing what the overall market was doing. I didn't see a whole heck of a lot of opportunity. Looks like things are rather extended on a lot of the major pairs. So anyway, we'll have to kind of see how the week transpires. But we'll take a look at the volatility report here real fast. Shane got this out late yesterday, and I had a little bit of just kind of a long drawn out afternoon, but so I haven't had a whole lot of time to review it just yet, but we'll take a look at it here. Let me make myself the presenter, and hang on guys, I'm trying to get it set up. Okay, here we go. Okay, so hopefully you can see my screen here. Should see we got the dollar, and then we got CAD franc. And to keep this real basic, I'm not going to go quite in depth as Shane normally goes, but pretty much the goal with the volatility report, guys, is we're trying to spot currency pairs that are right close to the expansion level or fresh out of expansion. And the idea being, especially if you guys are new to our program, the idea being is that we are early to the expansion and trend phase. And just so you guys know that I've said this before, but the definition of expansion is leaving contraction. Depending on where the expansions or the contraction zones are forming and in the context of how they're forming, they can expand directly into trend, or you could have those different legs of expansion swinging back and forth. So it could happen both ways. But with the volatility report, we're just trying to get close to that expansion phase where we know that volatility is hitting the market, and then we have that new market architecture to deal with to manage risk and direction from, which is that new expansion line. So you can see on the gold against the dollar daily, we're fresh out of expansion on the daily time frame. So that one would probably be wise to look at as far as volatility. Your 4 hour If you're trading the 5 into the hour, 5 into the 4 hour, you're probably going to get some decent trending moves over the course of this week on gold against the dollar. So that's one I would definitely keep on your radar if it's one of your pairs. Hang in there. CAD Franc, this one is actually a little bit has gotten a little bit more progress to it. So we've had the expansion line come out on the daily here. It expanded long, and now we're kind of trapped. Actually, I got to check because this was taken yesterday. I haven't actually looked at the pair just yet, so I'm going off the picture. But actually, you know, let's jump over to that. So Shane labeled the directional bias as short, but let's see how it's actually transpired here. So hang on, guys. Let me get my screen up. Okay. So let me find it real quick here. Okay, CAD Franc. Here we are. So, and also before I get into this, guys, if you want to go ahead and I'll take a look at some currency pairs that you guys are looking at. Anything you want me to give you my opinion on, you could go ahead and type in the chat while I'm talking right now, and then we'll go into those right after here. And any questions you guys have. If you're new, the points to these webinars, they're pretty basic. They're just to basically get you guys' mind around how to use the screen, how to look at the charts. So if you have any questions, even if they're basic, we can address those as well. So okay, so CAD Franc right now, let's see here. The 5 minute looks like we went into a long run, but we're still holding above. So let me take a look at the hour here. So right now what I'm seeing is that we're holding between this, we have this price zone between these two expansion lines, and the expansion, we were holding above that expansion when Shane took the screenshot, but the reason he said short is because the weekly trend is still holding short. So that's one thing, we're either going to rotate out of this or we're going to end up holding short. So this is when you get you get that divergence between the daily and the weekly chart. Say the daily, like it is blue, but the weekly is yellow. That basically tells you you're in sort of a big range, and you really need to narrow down on the daily. You got to get really intricate on your analysis to figure out what the possibilities are of where the trend's going to land. And you could use a weekly to help you kind of sort that out, where the daily is actually going to go. So, the weekly has this indecision on this candle, but it is holding yellow. So, you're going to, I would expect the bigger move will probably end up breaking short with the momentum of the weekly. But right now we are above on the daily. So let's go back to the daily. So right now, it's basically going to be what ends up holding, breaking out of this range right here is going to be the new move. Now, it very well may go long, but if it does go long, you'd expect to see price push over. You can see we did push long on the hour right here, but it backed off pretty hard. So it's staying inside that range on the daily between these two expansion lines. Pretty much whatever it decides to do, that's pretty much your threshold price between those. And I know I've talked about this before, but you want to use, when you have multiple expansion levels, you want to use them together as a group to paint a bigger picture. So when you have them close together like that, you can take an average of those lines, because they're all relevant and sensitive price levels that are going to give you information. So those are what you have to work with. That's the architecture that the market's laid out, and that's going to be the definitive range of that. And I would say probably the bigger move to look for is, like what Shane said, is on the short side because of the weekly holding yellow. Let's just put it this way: if you start getting yellow candles under this expansion level right here, I would say that on your 4-hour time frame, your 1-hour time frame in session, London, New York session over the course of the week, if that pans out, you're probably going to get some big moves to the downside. But it's really going to be split by mostly this expansion line right here. But I would also, if it does go long, if you play the long side, I would look to hold above this expansion right here. So that's kind of your window right there. So just let it play out, and wait till it makes sense, and you know what to do with it. So There is also a possibility that if you are going to play the long side, I will tell you right now, there is a good entry opportunity, perhaps right this minute. You can see that we're stacking architecture going long. So if you do believe that the weekly is going to rotate, and remember, it's kind of a 50-50. Actually, it's probably a little bit more chance it'll hold to the short side, just because the trend on the weekly is short. But the chance that it does go long, let's say you want to work that opportunity, that's your opinion. Basically, if we hold this level of architecture right now on the hour, if you're trading the hour into the daily, this is like basically your grade A opportunity where you're blue on the daily, you pushed up, and now you're under expansion. So this right here, if it does hold long, you do have a pretty big upside, because you're not only going to go to the top of this candle, but you're going to get through this expansion level. Well, just to the expansion level right now. Is about 205 points or 20 and a half pips. To the tops, about 40 pips. And then to this level of architecture up here, this last expansion is about 53. So you're pretty early if it does hold long. And your downside is it pretty much if it gets much below this, I would say like down into this neighborhood, then I would kill that trade. So you have a pretty small downside, and that's kind of the whole point of those grade A opportunities. You're either going to be at a significant turn or it's going to fall apart immediately, which and both are good, because if you're wrong, you want to know right away, and that's really the point of those grade A opportunities. They either go and turn into home runs, or they usually fall apart right away. So and like I said, it's both scenarios are good, because at the end of the day, we want to cut our losses short. We want to let our winners run. Everybody knows that, and that's what those situations we look for are kind of the sweet spot. So it is set up for a long, but again, you need to ask yourself the question of how much do you believe in that weekly to rotate? Because if this is going to pay at the end of the day, that weekly needs to turn blue in order for it to really turn into a home run. So you got to think about that first. So anyway, that's what I think about the volatility report for the moment. You guys can read the comments when you get a chance and go through that more. But either way, both these markets are about to hit with some heavy volatility, and whether it goes long or short, especially if you're trading the smaller time frames on gold or CAD franc, I would expect that you're going to get some good trending moves over the course of this week. So I'd hang in there on those pairs. So, all right, so let's take a look at some of your guys' questions. Give me a minute. I'm going to go through. Shane, if you want to do any input. Shane's kind of off the grid right now. He's on vacation, so reason he didn't go through the volatility report is he's running off a hotspot, and I'm not sure his internet's that great. So, but I know he could probably do some input here. Anyway, I'm going to look at some of your guys' questions here, and I see that you guys have put in some currency pairs, so we'll probably get into those here in a second. So just give me a minute to catch up.
Hello, everyone. Just wanted to say hi. Still here. I'm going through trying to answer some of your comments and everything in the comment section. I'll just be chiming in throughout the webinar.
Okay, so first one we're going to take a look at is from Sean. Appreciate your contribution, Sean. So we're going to look at Aussie dollar. Let's see what's going on. We'll just do a quick top down on that. It's pushing long on the daily. All right. So right now, I would tell you, just looking at these pairs, there's no entry right now. It's already happened. So nothing going on right this minute, but there is some lessons we can learn. Let me take a look at the monthly just so before we get into this. Okay, so we've been going long for the better part of almost 2.5 months. We've been headed long. So that's definitely the bias on the long side. We may get kind of a reaction because we did just come through this high on the monthly. So I would expect that you're probably headed for a turn on the weekly, or at least a break in trend here pretty soon. Let's take a look at the weekly. Yeah, you're getting up into these liquidity lines here. So I would expect that this is probably going to head into a rotation pretty soon and an extended pause. So let's just put it this way. If you caught the majority of this move from down here, personally, you could do whatever you guys want, but I'd be scaling out of that trade and taking your profits off the table. Just the fact that we're coming through these liquidity lines on these major time frames. But again, you guys make your own decisions. Just something you should be thinking about. Okay,
Hey
so the
Wade,
daily.
one quick comment I wanted to make on that last chart you're looking at. There's also a big cluster of expansion lines in there, which expansion lines mean orders. So when the market gets up to a big cluster of expansion lines, you can expect that it's probably going to start breathing. Just all through there is lots of expansion lines for it to hit and then, you know, crunch all the orders that are there. So definitely always expect turbulence at those levels, but then also a lot of opportunity as well, because turbulence creates pullbacks, which create, you know, low risk entries. So definitely worth looking at when it gets over into this area, but just don't expect the market to just continue doing what it's been doing up until that point.
Yeah, we're definitely going to hit, like Shane said, it's going to be turbulent because you got a lot of sensitivity coming up through these levels, and we haven't even maxed out, all the way up to here. So between the liquidity lines and everything, I mean, you can see that there's a good chance we're going to go sideways here for a little bit in here. But again, we need that to happen because it resets the market, and then we see how it deals with that architecture, and then it creates opportunity. So something you'll probably want to hang in there for. But anyway, as of right now, I don't think that there's any opportunity right this minute. It's pretty extended, but we'll go through here. One thing I saw on the daily, which is again going back to you guys, one of the biggest questions I see on YouTube, which I need to make a video about to address more. But a lot of people ask, "There's how do you know when price is settled? How do you know when it's settled?" And you guys know I've said it before. The price can always break out. It can just go. It just depends on the context of the contraction phase, what's going on, grouped together with the previous contractions, because it could be, uh, uh, if it just goes straight out of the contraction, well, that could be part of a larger leg of expansion on the higher time frames. So you have to take the time frames and the contractions into context. But either way, if you want to keep it simple, that's why we say you're below or above. That controls your directional bias. But if you're waiting for price to settle, you do have plenty of situations where it does pull away, it comes back, it tests that line, and then you hit the first rotation as you pull away. It happens time and time again. And if you want that to control risk, it'll give you those opportunities. It gives you one here, it gave you one here above, came down, tested the line, and then went into your run. And again, right here is that same situation. So, you don't have to trade unless you see that clearly has transpired. And once you see that has taken place, then as you get through that rotation, you can start getting aggressive and looking for that next push away from expansion. So again, if you have to see the price settling, then wait till it does it, because it will do it. It doesn't do it every single time. There is a lot of meat you can take out of moves that just break, but you have to be very vigilant on the lower time frames if you're going to do that. But like I said, if you don't want to do that, you want to wait for the exact clues of the price settling, coming back and testing that expansion. Then wait for that. Nothing wrong with that. So anyway, so that would have been the first clue. That happened on, let's see, on the 14th, and then coming into the 15th, 16th, 17th, and then we jumped to over the weekend to the 20th, and now we're at the 21st. But pretty much starting the the 15th here was your first blue. So trying to navigate in there for your entry, that's really where your trade placement was to get in. So as you're holding blue here, you're trying to find entry below these expansion lines right here. But remember, as you're finding entry below these expansions, if you're trading the 1 hour into the daily, this is just a tool for entry. At the end of the day, what you're expecting is that this holds blue. You want these candles to be closing blue. You want them to hold blue. If the minute they turn yellow, you need to start looking for your exit. Doesn't mean you have to immediately get out, but that's when you want to go to your 1 hour and figure out, okay, is this going to go against me, and where's the sensitive price levels? But just navigating your entry in here, remember, you're sitting waiting for that break on the daily chart, and that's what's transpired right here. And you're expecting a break, based on the activity that happened right here with that rejection off that expansion. So anyway, there was a good trade in there. We'll jump over, take a look at the 4 hour into the 5. So again, same thing on the 4 hour, pulling away from expansion, pretty classic. If you're trading the 5 into the 4 hour, I mean, you guys can see that, I mean, there's your opportunities. These ones did have, when you get a really strong move happening, if you guys feel like the move is going to be really strong, I know I've said this before, but you can buy it straight out of the box if you want to, but you do need to manage your risk at the expansion level. Because if it does come back on you and it goes through that expansion level, then you could be going into an extended multi-leg expansion on that lower time frame, or a full-blown reversal. So if you are going to buy the breakouts, there's nothing wrong with that, but make sure that you understand that your risk is going to be defined by this expansion level. Same thing that happened here. If you bought the breakout, came down, tested, or settled, if you want to call it that, and then made its progress up. So you gotta make sure you monitor your risk. Same thing right here. Expanded up, came down, held above, and kept going. So, and like I said, that's really if you suspect it's going to be a strong move, you can be wrong, and it'll go through the expansion level. But if it does go through the expansion level, it's time to ask yourself different questions about the scenario, because the 5 minute tells the future of the 4 hour, and the 4 hour gives the probability of the 5 minute. So, probability, if the 4 hours holding long, probability is whatever transpires over here is going to end up breaking out long. It's just up to us to find a strong entry point and manage risk in and around the lower time frame. So going back to what I was saying, if you get through that expansion level, you got to start asking your questions. What does this mean? If the move is really as strong as I think it is, why would it not hold above that expansion? If it's coming back through, you're probably going into an extended breath on the trend. And at that point, you want to back off, because that means if the trend holds, you're probably going to have an opportunity for a much better entry. So whatever you lost coming back to that expansion, getting through, for instance, on this trade right here, let's say it did get through and now it's down here, you take a loss, let's say in here. Well, there's a good chance it could come all the way back down to this level of architecture down here. So you get it down here and then take it back up in trend, because the fundamentals of the market direction have not changed. So anyway, it's just what you want to do when you take losses, because they are inevitable. Everybody takes losses. You want to use those losses to buy information. That loss, when taken the right way, should give you information about the strength of the trend, about the overall direction, about the possibilities that are in the market, the probabilities. You need to figure out what you just paid for. If you take a loss and you just emotionally get out of the market just because you feel like you should, or it's not really based on anything as far as the market architecture, then you just kind of just paid for your emotional experience. You didn't really get any like hard facts of information, which does happen sometimes. I mean, we're all human, but when you take a loss, you really want to do it based on the hard levels, so you can see how price has interacted after that. And that way you're buying a clue. You're not just arbitrarily taking a loss just because you got scared. So anyway, just something to think about. Anyway, that's Aussie USD here. Let me see what else you guys been getting bombed with questions here. So let me go through those. Shane, if you want to add anything to that, feel free, man. The thing's still running. Anyway, all right, let me take a look. And looks like Eric did good on Aussie dollar. Good job, Eric. So yeah, this is a pretty epic run. Like I said, there's no surprises here why it broke long on this. The anticipation was from the daily. If you guys start on the higher time frames, even if you're trading a 5 into the 4 hour, if you find something that's in the sweet spot on the daily, and like you just came out of a rotation like this on the daily, that the higher time frames, they got your back on the lower time frames. So you basically, when you see something forming on the daily, you almost are like a tiger in waiting. You wait for the 4 hour and the 5 minute to start falling in line with that trading plan. And then you're just ready to pounce because you know that the daily is coming around, and it's going to pay you in a big way. I know it's easier said than done in reality because there's a lot of waiting, and there's temptation to be in trades between, because if you're just sitting there not in a trade, sometimes people can feel like they're being unproductive. But in reality, waiting for those opportunities to come to you, that is trading. That's probably the most important part of trading, is not being in a trade, it's being in a good trade, one that you understand, one that has clear parameters for risk and reward, one that makes sense. That's really, at the end of the day, just as important as managing the actual trade is the waiting and the and acting at the right time. So if you guys aren't in a trade, just don't think that you're being unproductive. You're waiting for the right setup, you're waiting for the opportunity, but when it does come, you can't get scared. You got to pull the trade, and as long as you're not over leveraged and doing something stupid, it'll either act for profit or it'll act for loss. But if it's a well-defined opportunity and you understand what you're doing, regardless if you make money or lose, it's gonna be a proper trade. That will either give you the information because of the loss and tell you what you need to do to profit in the future on the same currency pair, or you'll win on it. So anyway, I don't mean to get off topic there too much. So let's take a look at pound USD. If I could find it over here. Oh, it's at the top. There it is. So pound USD is breaking long. Last trade, at least on the 5 minute. Let me see what the 4 hour. Actually, let's start with the monthly real quick. So monthly's at a sensitive price level. I see a multi-leg expansion, pretty clear as day right here. Expand low, expand high, expand low on the monthly. And now we're playing with that last expansion level. Good chance though, if we get rejected off of this expansion level, you're probably going to this low. If we get through this expansion level, you're probably going to this high. So you're at the tipping point right now. If you're looking at this as a long-term play, like you're trading the daily into the monthly, this is definitely one. Let's just put it this way: if we included the monthlies on the volatility report, which is we could, but most of our traders are going to trade shorter time frames than that. But we do have a few that trade the daily into the monthly. This would be on your guys' own scanners. You'd want to find stuff that's at the sweet spot, because this is there's about to be a big payday here to the long or the short side, and it's really going to depend on where price ends up according to this expansion line. So anyway, there's a good opportunity here for a longer time frame opportunity. So so we're at that turning point. Let's jump down to the weekly. Okay, so the weekly, if the weekly's gonna help predict the future of the monthly, you could see that we went long, held above this expansion level. So this may be that push to the long side, and then here's that high on the monthly chart. Same one on the weekly up here. That's your expand high point for the monthly. So this could be the start of that. So again, you could see by going lower into the time frames, they all kind of correspond, and you'll notice that the best trades and the best opportunities, they really start to make sense on all the time frames all at once. It seems like every time frame is aligning for that opportunity. When that happens, then you know that you found something probably pretty special. So if it's confused between a lot of time frames, it just doesn't make sense. Then there's probably no opportunity there yet. At least that's discernible and manageable. Jump down to the daily here. So the daily's breaking out long, again, feeding back in from the monthly. We're at that sensitive price level. This very well could be the breakout that takes you up through this expansion, up through the high over here, and then up to the high point. I think this is the high point on the monthly, the swing high point. So again, if that plays out, of course, that's a pretty long time frame. It's probably not going to all happen in 1 or 2 days. You're talking about potentially weeks climbing up to that point. But it looks like the breakout's reasonably strong for that to be happening. Now, once we get below the daily time frame, we're going to enter stuff that's pretty relevant to the London, New York session. So we'll jump down to a 4-hour. Basically, the 4-hour and the 1 hour is going to be your guys' guide to navigating London and New York. Usually, those are the best to catch the different, up and down swings even within the weekly time frame. So 4-hour, you got your volatility signal right here. Multi-leg expansion back and forth doesn't always need to happen, but did. Expand low, expand high, didn't attack the expand low point, rotated off average price with some aggression. So that's pretty much where it started. Turn off the auto scroll. Okay. So that was coming out of here. Let's see, where was this average price level? 1.25394. Okay, so this basically this price level right here is the expansion on the 4-hour. So if you zoom in, you had an opportunity once you got blue above expansion in that rotation. You see the 5 got super volatile right here. Okay, expand high, expand low, under expansion. That was pretty much your grade A opportunity above expansion. Pretty subtle, but a lot of the best entry opportunities are going to be pretty subtle like that. So you would have had to peg it right there for the best entry into the move. But you were above, and lining up with those macro fundamentals of the higher time frame would have put you into this move. But again, that's something it's a short-term opportunity. You can see you basically had about 5 minutes to be there and be ready for that opportunity. And that is really the goal of the ATS assistant on the grade A opportunities. I know a lot of you guys have been on the webinar with me before, know how I rant about that, but I don't recommend new people to jump on ATS assistant before you spent time on the screen. But in a situation, if you know what you're looking for and you have the manual experience of trading with the indicators and looking, and managing trades in and around the lines, you would have wanted that grade A signal right there, because as soon as it came through that liquidity line, it would have sent you a grade A signal, because if you knew what you were looking for, you would have recognized that as a pretty high probability opportunity entering right here and then managing your risk off of the 4-hour expansion line. But again, without the experience, that's something that someone may feel at this point. This hasn't happened yet. You can feel like this is just a pullback in a downtrend. But again, that's where you get those sensitive price levels. That was right there at that defining point. So again, I know it's easier said than done, but that's really what you guys want to aspire to, is using all these price levels together to manage when you have a low risk opportunity based on those lines. That's really all it's about. We can't control the outcome of trades. We can try to calculate probabilities of where price is likely to go, but at the end of the day, it's just about managing risk. So if you have a big potential upside and a small downside, we really can't ask for much better than that. And the ATS assistant would have told you that right there at the tip of that candle. So anyway, something to think about. But as that pulled away, pretty much, it's pretty textbook: below expansion, back through expansion, taking profits below entering, taking profits above the line as you're going up. And as long as this 4-hour stays intact, you're going to get paid on every single one. Even the ones that drop back far like this, you may have to take a hit navigating the entry, but the facts are, as long as that 4-hour stays blue, they're all coming back up through expansion. And if you guys want extra confidence in that, I know I've talked about this before, if you go through the other webinars, but some of you, one of the problems that you guys have had in the past is feeling confident in the 4-hour sustaining its move. And if you guys want more confidence in the 4-hour, a good thing to do is pair it with the daily chart. If you pair it with a trending daily, and you can clearly see the pattern on the daily is favorable for a sustained trend, then when the 4-hour lines up with that, the momentum between those two time frames will help you have more confidence in the 4-hour maintaining its direction. And then when you get extended moves away from expansion like this, you'll have much more confidence to enter, on these rotations and hang in there and expect, because right here, this was from this turn down here, this was an exact calculated move to expansion. It's not a huge move, but you're talking about 20, 30 pips from the turn down here, and you're only trying to get to right here. And you can see the way that we boosted up through that level and then held above, up here is kind of the gravy zone. You're going to try to manage this the best you can, but you're guaranteed, as long as trend holds, is from the turn up to the white line. And then how you interact with that line is where you need to either cut it or hang in there the way it reacts to that. But again, sandwiching the 4-hour with the daily will give you guys a little more confidence to hang in on these extended pullbacks and take some of these bigger moves back up to expansion. So, and these are, when you get these are actually much better opportunities than trying to just navigate the chop. You could still do okay in here when you get below these expansions. You come back up, take it through. There's little 10 pip pops in these moves as well, but in reality, you want to try to throw some 20s and 30s in there along the way. So these extended pullbacks become pretty good opportunities in the context of a 4-hour and daily trend, and even preferably with the weekly supporting that. So it really just comes down to how you feel about those higher time frames, and that's really what's going to give you the confidence to hang in there. Whereas other people that are just looking at one single chart may bail and get out of what was really a good opportunity. So anyways, again, something to think about. I'm
Hey
going to go
Wade, I was wondering if you could pull up the 15-minute chart on pound dollar real quick. I want to go over a little entry opportunity that was in there. So so if you go back four boxes on pound dollar, you can see that we had a little master pattern get created right there, where it didn't expand low, then expand high, and then that leg going up to the next box was another expand high. Then at that point, we were still looking for our expand low. So that's what that whole pullback was. It broke through the low of that previous box, kind of finishing that whole cycle. Now, in context of this, we know for sure that the directional bias is long, so we'd only be looking for those expand lows to enter and take the market up into a long move. So anyways, that was kind of the target. That was how you would have managed getting in on that pullback right before it started taking off again. So the master pattern on your lower time frames is going to be how you navigate some of those breaths inside of the overall trend, and that would just be an example of that right there playing out.
Yeah, absolutely. And just to kind of go over what Shane said, the master pattern and the classic multi-leg expansion, expand high, expand low, expand high, that kind of unraveling of the market as volume hits. Really, all we're doing is we're using the higher time frame in trading. If we are clearly long on the higher time frame, then all we're trying to do is basically trade the expand low legs in expectation that we're going to get an expand high. And that's the probability, and that's what gives us a strong entry point. Whereas if you're only looking at the one time frame and you get an expand low, you can feel like it's a reversal. But what someone feels like this, they feel like this is a reversal, that becomes an opportunity for you guys because you're looking at it in the context of timing with the contraction phase, with the boxes. And you're just betting the fact that, hey, this trend's still long, people are getting suckered into the short, I'm going to do the opposite. And that's how you put yourself against what 95% of other people are going to feel. And that's, at the end of the day, that's the edge. So
To
it's
add
actually,
on to that, kind of what you said, when you're going along trading and then all of a sudden the market just takes off, you know that you can trade whatever direction and you will mostly see profit regardless of the direction that you're trading in. But when you're trading in trend, that's when you're going to get that entry, and then you're going to get that pop where it just takes off out of nowhere and it just starts pushing in trend and starts pushing highs or lows.
Yeah, and so that's really, that's the basic edge that you guys, with the basic strategy, that's what you're taking advantage of. You're taking advantage of the timing of the trend where other people would see these little minor pullbacks. If they're looking at moving averages, they'd be trying to bounce off of a 10-period moving average trying to find it. You're taking the pullback in context of the three market phases, the contraction, the expansion, and then when you get a swing low point, even like something dramatic like this, that to most people feels scary, but to you it feels like opportunity because you know that you're still long over here. And when other people are dumping their trades based on that short spike, again, even if they're long, let's say they're buying, they see that these legs right here. Let me zoom in a little bit more. They see that this is. Remember, they're not looking at boxes. They're looking at some sort of average price indicator or MACD or something. They're seeing that this is starting to pull long, and then the market dumps on them like this. This is going to force most people out of the market looking at lagging average base indicators, something like this. But the context that you guys are learning, you're taking it into consideration with this contraction phase being your reference point, that we are now below that expansion, and that's where basically the dumb money's getting out of the market, which creates an opportunity. You remember, you're doing the opposite. If you used to trade that way and these types of market moves scared you, just think about what you would have used to do. You probably would have said, forget it, the trend's done. You would have saw a profit up here. You would have probably got out at a break even or a loss down here and not known what happened. So you're kind of flipping that whole mentality on its head, because that's, at the end of the day, that's all these lines are supposed to do. They're supposed to give you those levels where people's their biases and their beliefs are going to change about price based on the neutral zones and the average prices that those neutral zones give. So anyway, like I said, that's the edge that you're exploiting in its simplicity at the end of the day. Now, you can do a lot more with ATS as far as using it as an overall map. There's counter trend opportunities. There's a lot of different things you could do, but the basic thing you want to stick to is just staying in trend. And it just comes down to being able to spot a well-formed beginning of a trend, something like this. It's had a few expansion legs, has showed that it's starting to settle. Wait till you see that and then trade on that first rotation. That's your sweet spot right out of there. That's really what you want to do. You want to focus a lot of your attention on being good at finding the sweet spot on the higher time frame. And when you do that, then you have much more confidence on the lower time frame. It kind of takes care of itself. So, okay, I'm going to go through some of your guys' questions here. Just give me a minute. And we're probably going to wrap this one up here pretty soon. I got some other stuff I got to get into here pretty quickly, but I'm going to look for a few more of your guys' questions and we'll probably wrap it up here. So hang on, let's take a look.
Hey there, I wanted to add in one more little note. So regarding that 15-minute entry, so again, on Wade's 15-minute chart on the right-hand side, 4 boxes back, we can see again that we had master pattern start to develop there, where we had expand low, expand high, expand low, and then it took off to the long side. We formed a new box, and then we had that big snap down short. So Mark asked a question just about the Heikin-Ashi candles and how to deal with those at the expand high, expand low points. The Heikin-Ashi are actually invaluable in this situation because we took out that low and then you could literally just get in once you feel that it's going to stay blue. So maybe that next candle you wouldn't have quite done it, but certainly the one after that, after you had a confirmed blue candle, and then manage your risk off of the low of that snap down to the short side, and then ride it up. And again, you're going in long because everything on your higher time frames is saying long at this time. So that's how you'd manage risk and kind of take advantage of the Heikin-Ashi.
Yeah, going along with what Shane's said regarding Mark's question, we always we've addressed the Heikin-Ashi candles quite a bit, but with the Heikin-Ashi, you're giving up the noise of the standard candles, but you're in return, you're getting stability of direction. So at the end of the day, we think that the stability of direction far outweighs the problems of standard candles throwing you off the scent of a true trend. And at the end of the day, we have a very elaborate way to trade a trend at the end of the day with a basic strategy. So we want any indicator that really helps us feel confident in a trend. That's going to be more important. So that's why we use Heiken Ashi. And then we also have the hybrid and the other candles. If you guys go through, if you're new, you can still take a look here. You can switch between standard. You can do HA standard, which is a hybrid, or no candles, which I don't know why you'd want to do that. But anyway, you can switch back. And because if regular candles work for you at the end of the day, you know, and you've been trading with those for a lot of years. I have guys that have been trading for 20, 30 years. They like regular candles. So, you know, it's whatever works for you. I really don't care. But I think for the masses and for people getting into this program, especially new traders, I like to push them towards Heiken Ashi candles, just because I think they're just way less noisy and they're just easier to see the overall market phases with. So that's kind of why it's our go-to. Okay, I'm gonna take a look at dollar CAD for Devon. So Devon's first day, welcome to the program. Glad to have you in. Okay, so based on the 4-hour, I'm gonna tell you that this thing's pretty much done. Opportunity started back here as you rotated off the off that expansion level. Just take a quick look at the weekly, see what the overall weather's like. Okay, we've been trending short overall for 1, 2, 3. We're in our 4th week now of being short under expansion. It's probably going to keep going. I could see that we're probably going to break this low and probably head to the expansion line down here is probably forecast on a weekly basis. But let's head over to the daily, see what's going on there. Okay, yeah, so getting above these expansion levels, entering into the weekly trend, headed short, pretty much what's going on here. Kind of coming out of some noise on the daily. So this market is probably it's probably opening up. I know it wasn't on the volatility report, but just the amount of volume coming into this daily candle as of today, I would say that there's probably going to be some good moves ahead on your 4-hour and 5-minute chart. So this is one I would definitely, if one of your pairs is dollar CAD, I would look to the 5 and the 4-hour for some good setups, probably over the next couple of weeks. So probably going to be some good trading. But anyway, you're definitely short. Everything's pointing to short. However, the opportunities at this moment are probably not very many because it's already gone. So let's go to the 4-hour. Let's go to the 5. Okay, so here was that last push up right here on the 4-hour coming up through expansion, got rejected. Big aggressive high volume turn off of that. So your grade A opportunity, this was, what's the time on this candle? So 720, 800 candle. Okay, so basically in here was that turn whipping through here. This was probably still blue in here. So realistically, you probably wouldn't have had an entry until you got down into here. And you can see that we had multi-leg expansions happen in here. Take a look. Let me zoom in on that. And this is the importance of marrying the one side of the expansion range. Here we go. So right here, you had expand high, expand low, expand high, expand low. So it's 1, 2, 3, 4, 5. Another expand high, expand low, 6, expand high, 7. 7 expansion legs coming out of that move. And they were all, as long as you stayed on the short side, which is what ends up happening in a situation like this, which does happen in the markets, people get beat to death in a situation like this, because they're chasing it long, chasing it short, chasing it long, chasing it short, and they end up getting whipsawed to death. But what you guys need to do, part of the edge that you're exploiting is the fact that you're married to one side of the market based on the higher time frame. So even though it took a while for this to take off, as long as you stayed on the short side, short, 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 no longs. Right here, you came above, it held at this. Right here, you can see that it didn't get through the, or it held, it got rejected off the expansion level. That's a signal that you gotta, we may not be getting progress, and you want to get out, break even at least on those. Maybe a small loss because it was so aggressive, but you can see it went into an extended move, and it broke the expand high point of this origination box right here. So when you're looking at this, gazing over this, you can see where those sensitive price levels are. But anyway, this was difficult to navigate. So let's forget about that one for the moment. You would need a little more advanced knowledge and more time to really see how many expansion legs were forming there. But just sticking to the basic strategy, again, even as you come up with this one, you come up, held this level of architecture here, you're still rubber banding back to those expansion levels in trend because the 4-hour is still yellow. Again, you pull back, maybe you take a profit off this one, depends on how quick you are, but overall, we'll call these all break evens. You're just trying to get something that gets through expansion. Finally, you had a significant move right here. Again, coming back to your profit progress point, which was this expansion. It's the lowest one in the downtrend. At the rotation, rubber band right back. We did push through, had another aggressive move back. This one, you should be taking some money off a move like this, though. Once you get down through the expansion, you really don't want to ride it back up through the line once you break that barrier. If you do an entry like this above the line and it comes back, these are usually break-even situations, just the way they end up happening, especially on a 5-minute. If you're on a 1-hour, you're probably going to take a decent profit out of it. But on a 5-minute, just with the spread and everything, situation like that, probably break even. This one got through the gate, didn't hold. You still had a reversal, but notice that it did come up and hold the architecture right here. So this is another shorting opportunity as you come up and test this expansion. We're looking for rejections in trend, rejections of expansion, and we're looking for deviation out of trend above expansion if it's in a down market like this. So anyway, these can be opportunities a little bit more advanced, but you are still above this expansion level right here, and you're getting rejected off of this. So you could enter short right here, and then you're going to manage your risk in and around that level. Because like I said, at the end of the day, the whole thing that's going to keep you grounded through a situation like this, which is one of the harder situations to trade in, is staying true to your higher time frame directional bias, especially when you're fresh to the rotation. Remember, this is all like you're like one or two candles into this rotation. You're real fresh, and you had this big major clue that you held this architecture right here before you had the rotation. So there's a lot to hang into to a short position through here, with the expectation there's going to be a pretty decent sized payday on the other side. So, but the only thing that got you through this was remembering and staying grounded in the fundamentals of what's happening on your higher time frame. If you guys lose sight of this through this kind of chop like this, then you're going to end up saying, forget this. You're going to start buying and selling the market. You're spreading your probabilities all over the place rather than just playing the one highly probable side of the market. And the next thing you know, right about here, you get caught in a long trade saying, "I'll forget it. You know what? This is a reversal." That's what everyone else would do. They would get frustrated with the trend and give up on it. You do not. Your edge, a major part of your edge, using the system or regardless if you want to use the system or not, your edge is not giving up on the trend. When you find a clear defined trend that's given really good clues that it's gonna be stable, your edge is not giving up on that trend. It's hanging in there. You're staying. If it's long, you're staying long. You're long. You're long. You're long. You're long. Every opportunity. If it's short, you stay short. You're short. You're short. You're short. Every opportunity. That's part of your edge that other people are not going to have the discipline to do. And at the end of the day, there's an exchange between winners and losers, and you need to be on the other side, taking the money from the people that have not stayed disciplined to the trend. They're the ones that are going long right here. You're doing the opposite of them. You know, their liquidity lines represent those stop loss levels. Every single sell liquidity line in here, in trend with the 4-hour. After you get that clue, which one of these liquidity lines didn't give you a clue that that 4-hour is still intact? Right here. Banks are using that. It's the same places that they need to fill their orders. They're not jumping in down here. There's no liquidity for big positions down here. You can't move money down here. You need to move money up here. And they move the market. We don't. As retail traders, we don't move it. They have to forecast very safe entries where there's liquidity. There's buy liquidity coming into the market, not only from these stop losses, because as these people sold right here, their comfort zone is up here. This represents those clouds of stop losses of people that are going short. They get stopped out. The other side of as they close out that sell order, it becomes buy liquidity. And then when buy liquidity comes in the market, it creates opportunities for selling in mass, which is why you get reversals at prominent highs and lows, because there's liquidity available. So from an institutional perspective, you're counting on that liquidity to fill your sell position right here. And then as it goes in trend, as it goes down, you're betting on the fact that other people are going to jump in, push the trend, and then you're able to scale out of that position. Not because, I mean, you have to be clever to do that, but you got to think about it from, if you're looking at purely available liquidity in the market, forget the charts. You're looking at where I want to go short in this market, and you're looking at the orders rolling in as a market maker, and all of a sudden you see here's a huge cloud of sell or of a buy liquidity that's coming to the market, and you know you want to be short. They don't even need to look at this chart. They just know what the liquidity has come across their desk and is available. They say, I'll take it. I'm going to sell all those orders. I'll sell all of them because I need to be short this market. So think about it from that perspective. How would you need to move money? How would you, if you were a market maker and you went and told your boss that I sold the market with a huge amount of whatever, a market moving amount of position size, and you told your boss, I sold down here, he would look at you like, what? You're an idiot. Why did you do that? How are you going to get out of that trade? You know, you're in a terrible, terrible position. So think about it from that perspective, and you'll reverse engineer. That's what ATS is all about. It's about giving you those sensitive price levels, helping you define the trend, and then you're figuring out how is big money going to be moved. Because at the end of the day, in order for this market to do anything meaningful, big money has to be involved. So between the coming out of the contraction phases, that gives you your first clue that bigger money is getting involved. And then using the liquidity lines and the expansion lines, you have those sensitive price levels, and you wait for the reactions, wait for the story to unfold, and then you'll see, you'll have the likely points where big money is going to move into the market. And as you see them move into the market, you try to align yourself with that. You're not always going to get it perfect, but at the end of the day, it's the only way to really sustainably do this. Because it's going to give you the strongest positions that you can defend. The biggest reason that traders fail is, number one, is over leveraging, so they get blown out after one trade. They either win or they lose, and then they're out of the market. But number two is weak trade placement. It's them jumping in short down here, and then the market goes. In this case, it would have worked out. But remember, the market ranges 95% of the time, or 90% of the time, is this right here. So if you're trading high leverage and you end up in a sideways market most of the time, then there's a good chance that your trade is going to be in the money, and then there's a good chance that your trade is going to be out of the money, all in the same trade. The only difference is you're not going to close the trade when you're in the money. You're going to close the trade when you're out of the money, because your pain threshold is going to get pushed especially if you have a lot of leverage. The more leverage you're using, the more pain you're going to feel the moment you get out of the money. And then it's like touching a hot stove. You don't want to feel the pain. You're going to pull your trade out of the market. So, you combine that with a market that goes sideways most of the time, and then you have your formula for why people lose money. So if you want to make money, you're going to do the opposite of that formula. You're going to trade in trends that are forming, that are fresh, not that are exhausted. You're going to marry the trend, and you're going to enter the trend where other people aren't likely to do so, and where institutions are likely because they have to. That's it. Just work that out. If you never saw ATS before, but you looked at the market and you said, I need to answer those questions, you'll end up with this screen. You will end up with boxes, expansion lines, and liquidity lines. Because that's the closest thing to represent the price action that goes into that behavior. So anyway, I don't mean to preach too much on that, but I'm trying to get your guys' head around. I'm kind of tired of rambling on the same things. If you guys that are new with us, you go back and look at all of our archive webinars, I talk about the same things over and over again. It's not that difficult. It's about your ability to identify the trend and then get strong trade placement in the trend. And if you combine that with smart money management, you have a winning recipe here, because you have stronger positions than most everyone else. And then your lack of over leverage allows you to be creative and not dump those positions the minute they go. If you don't nail it just right on the entry, you can still hang in there because your fundamental idea is still intact based on the higher time frame trend. So anyway, that's really all we're doing here. It's not that difficult. It's not rocket science. As long as you maintain those rules and that discipline, then you're going to be in the money on most of your trades. And the only ones that you're going to lose are ones that are major reversals. And if you're not over leveraged, that should not be that painful, because you're going to know it's a reversal. Wait for the trend to reset up. Wait for a fresh one to give you a clue like this. That was a beautiful clue right there. And you start getting aggressive at the turn. Take some out of the middle. If you don't get the whole move, doesn't matter. Wait for the next clue again on your higher time frame. Do it again. So that's really, in my opinion, the best way to approach it. If you guys have a better formula, then hook a brother up. But after over 10 years and working with hundreds of people and in person and everything that we've gone through, I haven't found anything better. So just try to keep it simple on you guys. All right. Anyway, guys, I'm gonna wrap it up with that. Hope you guys learned a little something from today. We're gonna have a meeting, and we're gonna try to figure out more stuff that we can include in the webinars, more content and things. We always got a million things going on with development and everything else. So, but anyway, we're gonna try to maybe do things a little bit different on the webinars here coming up. And then we are also still working on getting you guys out ATS Assistant for that the next revision of that. That'll have the advanced filters and things like that. So hopefully we should have some announcements on that by next week. So we will keep you guys posted on that. Until then, appreciate everyone being on. Thank you guys for hanging in there. No, I've had a lot of people that have been with me a long time. We got just some awesome people on board, and just really privileged and happy that we're able to work with you guys, and really see some amazing emails with some of the trades you guys take. You guys that are dedicated, you guys know, you see that it's paying off, and it's not really, this is just a tool. ATS is a tool to get you on the right playing field, but what's pulling it off for you guys is your dedication. It's the fact that you're not giving up, and the fact that you just made it up in your head that I'm just going to keep trading until I get it. And you just took failure off the table. That's why you're making it. And you combine that with understanding the correct playing field that you're actually dealing with, and you're gonna win. It's just a matter of time. But it really starts in your guys' head. If you guys can't grant yourself the ability and the basically allow yourself to be successful and condition your mind that way, it's going to be an uphill battle. But you guys, anyway, we got a lot of good people on here, and I appreciate you guys. And you guys add a lot to the community, especially you guys that are active in the forum. Appreciate that. So anyway, with that, I'm going to leave you guys with the rest of your week here. Everyone pull some good trades. If you guys need any help, send your trades to support@tradeats.com. More than happy to give you guys some insight if you want it. If not, just follow the rules, stay in trend, do not over leverage, live to fight another day. You're not going to get them all perfect, but that's it. Just slowly chip away at that account, and that'll take you guys to success. So anyway, thank you guys so much, and we will see you guys next week. Thank you.